Welcome to Investors Insights. Our topic today is market data that concerns us. We're receiving a lot of emails and phone calls from clients just inquiring about all the media headlines they're hearing out there, the emotion that's out there, and asking, what could possibly cause this market to become more volatile or to have a downturn. So, and what we like to do is we like to not only talk about what's in the media so you know how it relates to your portfolio, but also to dig deeper and to understand what are the other things going on out there, topics, data that we're concerned about that may impact us on down the road and make the media situation possibly just the hot topic of the moment. Agreed?
Agreed.
So Trey, you brought up some great points about consumer debt. In previous vlogs, we've talked about some of this, but
so in previous vlogs, we've talked about, I think last week we talked about wages being down or not being up a lot and savings being down. Right. And then this week we're looking at retail sales and will the consumer be spending in spite of a lack of wage increases? All that data is important. It sounds good, but why is that important? And some information came out this weekend that kind of really points that out. So the first quarter, the consumer household debt rose to a record $12.7 trillion. That's an all-time high, surpassing the 2008 high. To put that into context, that is larger than the entire economy of China and nearly 4 times the size of Germany. So at a certain point, as the consumer debt grows, which happens when you have savings falling, spending going up, and wages not going up, that becomes untenable. At a certain point, people can no longer finance or pay for their debts, and that starts to decrease and harm the economy. Without any kind of push to wages or a fall in retail sales or any kind of impact of that debt, that could become a very large issue coming down the road.
So like in 2008, for example, it was the housing debt, the real estate debt that caused the downturn.
This isn't really real estate debt this time. It's more automotive debt, student debt, credit card debt. This is more kind of shorter term spending debt, and we need to see something change in the makeup of economic data that will help support that debt.
And the productivity of the worker.
Yeah, talk about that.
The productivity of the worker, and that's simply the amount of output in the GDP the worker produces, has been very anemic for 5 years, 0.6% annualized. That's adding to that too. If you go back and look at that historically, that's the third worst 5-year period since World War II. So somehow we're going to have to shake off this productivity.
And when you brought that up in our meeting this morning, also you emphasized that Trey has talked about this before in other vlogs,
Absolutely.
and that we need to continue talking about that because people constantly are asking us, why isn't the economy growing more? Well, productivity is
definitely
big part of it.
If you're not more productive, why are you going to get paid more?
Absolutely.
And if you're not getting paid more, how are you going to pay off this $12.7 trillion in debt?
Right. And if you're not out there spending money, how does the economy grow, and how do corporate earnings maintain that growth, which impacts your portfolio?
Yep, directly.
Exactly. So great point there. So, and then Bobby, from standpoint, talk about in terms of a topic that we think is going to be heard later this week or into next week.
Yeah, so the renegotiation of NAFTA starts this week on Wednesday, and that was a big campaign promise by President Trump. And so some of the goals of the renegotiation are to lower trade deficits with Mexico, obviously tighten the labor laws, and then also raise tax threshold for e-commerce purchases by Mexico. So this is important for you, the investor, and important for the economy because 14 million jobs depend on trade with Mexico and Canada. Right. And then over $1 billion of e-commerce, or not e-commerce, commerce period, from crosses between the northern border states. And so
every day.
Yeah, absolutely.
Right, which could have a huge impact on the economy overall. And then Ashley, talk about North Korea and the information that we've put out to clients.
Yes, put a special communication out last week on that, another market area that concerns us. You have to look at the perspective on it. The U.S. is a massive economy, so it takes a lot of inertia to move it. Yeah. So usually when you have a geopolitical event like that, it has a tendency to pop markets down some, but not damage it permanently.
Right.
A perfect historical example of that's Cuban Missile Crisis. The indices on average fell about 6% during that, but quickly recovered afterwards.
Right.
So it takes more than just geopolitical.
Right, and we sent out a special notice to our clients last week explaining that, not only emphasizing North Korea, but from a historical standpoint, like the Cuban Missile Crisis and others.
Yes.
And we also have that now on our website for people to
your
view as
reference.
well. So the point being is what we discuss in these vlogs are just not one and done topics. They are topics that we continue to stay focused on and giving updated information on. So on that note, we thank you for taking time out of your busy schedule to listen to us today. And also you can continue to track us through Facebook, LinkedIn, Twitter. In addition to that, we've thoroughly enjoyed the dialogue we've been having in phone calls and emails and discussions with our clients on topics like we talked about today, and want to continue that dialogue. We hope you have a great week, and we're going to keep you updated. Thank you.